Your health insurance premium is the bill you pay every month just to keep your coverage. Here's the simple version.
I'm Maya, and today we're making premiums simple.
Your premium is the amount you pay every month to keep your insurance active, whether or not you use any healthcare that month.
Even if you never see a doctor that month, you still pay the premium. It's the price of keeping the plan in force.
The premium is different from your deductible, copay, and coinsurance. The premium keeps the plan active. The others are what you pay when you actually use care. By law, only 5 factors can affect your premium: your age, where you live, whether you use tobacco, your family size, and the plan tier you pick.
For example, insurers can charge older adults up to 3 times what a 21-year-old pays for the same plan. That 3x is the legal age rating limit set by the ACA.
Tobacco users can be charged up to 1.5 times more. That 1.5x is the maximum tobacco surcharge allowed by law.
Here's the good news. If you buy through the health insurance marketplace, you may qualify for a premium tax credit that lowers what you pay.
Your plan costs $500 a month. If you qualify for a $300 premium tax credit, that $300 is sent straight to your insurer, and you pay just $200. The $300 comes from the advanced premium tax credit based on your income.
That credit is an advance on a tax benefit, so you reconcile it on your tax return. If your income changes, tell the marketplace so your credit stays right.
Quick recap. Your premium is your monthly bill to stay covered. You pay it whether or not you use care, and only 5 factors set the price.
Marketplace premium tax credits can lower it, with the credit paid straight to your insurer.
I'm Maya. If this helped, hit subscribe, and I'll see you in the next one. Let's make insurance simple.